Breaking news, the Dow, while up 236 points, had been up more than 270, but still we've got this rally just as the Fed has officially lowered its cone of silence. Silence now until the big announcement next Wednesday to hike or not to hike. Let's bring in Terry Duffy, executive chair of the CME. Markets now believe that there's about a 90% chance the Fed won't move. Jamie Dimon of J.P. Morgan says, come on, just move. Lyle Brainerd says, no. Whose side are you on?
Well, I mean, the Fed has been very confusing overall, Liz, as you know. I mean, they have signaled over the years that they said they wanted to see several things happen, then they would start to move rates. They haven't done that, and the only thing they've done is cause turmoil, volatility in the marketplace. So I heard your earlier guest say that if they only move it to 25 basis points, if that's all the economy is leaning on, that's a big problem. I happen to agree with Wilbur Ross more than the other two. I like Jamie Dimon a lot. I think he's absolutely correct. The rates need to move. I think the Fed's already lost its credibility, to be honest with you. I don't think it can keep its credibility because it should have done it over the last several years. So I think that's the only place I would differ with Jamie, but I completely agree with him. But I think Wilbur Ross said it best.
Would you worry if they do hike just a quarter of a point and the market drops about 1,000 points short term, as it did back in December when they hiked the last time? Because then you see a comeback, don't you? So
well, it's hard to predict if you're going to see a comeback in the market or not, or is the market fully priced, as Wilbur also said? I mean, don't mean to quote Wilbur all the time here, but he gave some really good comments. So when I look at the overall market today, I mean, it's been trading extremely high, and you're looking at corporate earnings, and there's no way they're keeping up with the overall market.
Can you make money on the Fed funds futures pits?
Yeah, you can make money in Fed funds futures.
Teach people. What do you do?
Well, I mean, you can either be long or short, obviously. Decide if they're going to move or not move. It's no different than trading a volatility index. It's the same thing. It's just a futures contract.
Have you seen that volume move higher on those particular trades?
We've seen that volume move higher historically over the last couple of years, but we've seen it tail off a little bit. I think it's the old situation where people are crying wolf. I mean, people will just eventually give up on it, and now I think it's going to be a wait-and-see situation when the Fed does move rates. But the whole situation with rates is we're trying to lower rates so we get people to spend in the economy. I'm trying to figure out who are the people that are going to spend. We have roughly $9 trillion of consumer debt outstanding today between mortgages and everything, $20 trillion as a nation. When you look at the savers of the United States of America, we have roughly 14%, Liz, of the United States has $10,000 in their account or more. 86% has less, 21% lives paycheck to paycheck. Who exactly are these low rates stimulating to go into the economy? Those people are already in debt, unfortunately.
Yeah, it's failed now.
It has totally failed.
It doesn't work anymore. I don't know if it ever did. It may have worked initially. Does it stun you to hear that OPEC is now also pointing the finger, a sharp finger at the Fed and saying, you know what, we don't control oil prices, we don't control the energy sector, the Federal Reserve does. You guys trade oil heavily at the NYMEX, which you own.
Right.
What are you seeing there? Because we've seen some real gyration.
Well, and we're going to continue to see it, because anytime the market goes up, you know, I mean, the production costs are X, Y, or Z, and you can get more oil out of these shales today at a higher price, the input costs. The lower it goes, it's not very productive to be in that business. So I think the market's going to be in a range. I mean, you had a guest on earlier from NYMEX, I believe.
A range above 50?
He had, what, 50 to 40 or something in that area. I mean, it's hard to predict the price, but I think from our sake, we're here to manage that risk, but we're going to see volatility, you know, whether it's 60 or 30, but we're going to see a lot of movement back and forth on different policies.
Here's the closing bell, Terry, and you get to preside over a 249-point game.
Thank God.
Terry Duffy, executive chair of the CME, and we close it out with this major rally. Market set to cut deeply into Friday's losses. Here's